Your most important asset isn't your house or your pension, it's you. Now, the interesting thing here is that you wouldn't dream of not having home insurance or not insuring your car, and you'd even probably feel like you were sailing a little bit close to the wind if you didn't get travel insurance when you go on holiday. But when it comes to our most important asset, over 60% of us don't protect it at all. Now, let's just think about this. If we take the average UK annual earnings of £27,000 a year and increase this in line with inflation across, say, 50 years of work, those are lifetime earnings of over £2.2 million. So if you're earning more like £50,000 or £60,000 a year, you're starting to get towards the 5 million mark. You're almost definitely going to be the most important asset you've got. Now, I'm sorry to get a little bit morbid here, but we also have to be realistic. Unfortunately, 1 in 2 people will now get cancer in their lifetime. And of those diagnosed, 64% will be under 75, so it's a really important consideration for your financial plan. The Institute and Faculty of Actuaries carry out a continuous study into mortality and illness across the UK, and it provides a really rich source of information to make assumptions from. When you consider the data, it should be a huge reality check for us. Believe it or not, a couple in their 30s have a 59% chance that one of them will be off work for longer than 2 months with an illness before they retire, a 27% chance of suffering a serious illness that could be long-term or debilitating, a 9% risk of one of them dying, and a 67% chance of any of those 3 things occurring before they hit retirement age. 67%! And that's why ensuring you have the right level of life assurance, income protection, and critical illness in place for your circumstances is just as important as putting enough money in your pension. A lot of people I speak to have also rarely checked whether a death in service policy through their work not only covers their mortgage, but also will be enough to ultimately replace a lifetime of earnings. They also don't realise that their corporate income protection alone, in most cases, will only cover a portion of their net income, usually around 50 or 60%. So if they do get ill, how then will they fund their pension? It's really important to look at what your objectives are, what the risks are, and then what the right combination of policies to ensure any of these risks will cause as little financial disruption as possible. You really are the most important asset, and if it's not you, it's probably someone else in the family. So make sure to protect yourself over and above anything else, because remember, your money really does matter.